leave encashment. Some books say leave salary, some books say leave encashment. But anyhow, when all your friends were enjoying holidays, you are toiling hard in the office. You are working hard in the office. Even on the leave days, you are so committed that you are working. Employer says, I'll pay you because you worked on holidays. You could have enjoyed holidays like others, but you are working hard for the development of the organization, even during holidays. So we'll pay you leave salary. Now, if you are so anxious, you go to the employer after 6 months, 1 year, 2 years. During your employment, you ask the employer to pay your leave salary also. Then employer will be very kind to pay, because finding hardworking people is the most difficult thing in the world today, right? So employer will pay leave salary if you demand during the employment also. But the point is, if you receive leave salary during employment, it is fully taxable. Sir, you may be government employee, you may be non-government employee, doesn't matter. Did you receive leave salary during employment? Yes, it is fully taxable. That's it. What about if you receive leave salary at the time of retirement? Then if you are a government employee, it is fully exempt. So leave salary received at the time of retirement, fully exempt. Leave salary received at the time of retirement is fully exempt for government employees. But if you are non-government employee, least of the four is exempt. What are that for? Come on, concentrate. What are that for? Actual leave salary received. So I am talking about least of the four is exempt. So how will you do? You will take actual leave salary received minus this exempt portion, balance becomes taxable. But what is exempt? So we have to calculate four things. Out of the four, least is exempt. Okay, chalo, come on. What are the four? First, actual leave salary received. Second, 25 lakhs rupees. First one is actual leave salary. Second one, 25 lakhs rupees. Third one, average monthly salary into 10. So third one is average monthly salary into 10. Fourth one is unearned leave into average monthly salary. Now, four things are there. Out of these four, least is exempt. First one is actual leave salary. Second one is 25 lakhs. Third one is average monthly salary into 10. Fourth one is unearned leave into average monthly salary. So first, let's understand salary, then average salary, then unearned leave. That's it. Let's start. Salary is equal to here basic pay plus DA retirement plus commission on turnover. Most of the times salary definition will be same. If you are not covered by payment of gratuity and receiving gratuity, there also salary is equal to basic pay plus DA retirement plus commission on turnover. If you are covered under leave salary, here also the same. If you are receiving voluntary compensation on retirement, you took voluntary retirement, you got compensation, or HRA computation also. So most of the cases, salary definition is basic pay, DA retirement plus commission on turnover. Now, when I say average salary, it is not 3 months or 5 months average. It is 10 months average salary. But here, there is a slight difference. When I say 10 months average, you have to take from the date of retirement. Right? Let's understand in detail. See the example which is there in the notes. An employee retired on 17th December 2024. Now when he retired on 17th December, when I calculate 10 months, from 17th December you go 10 months back. So 17th December, if you go back till 18th Feb. So can I say like this? From 18th Feb 2024 to to 17th December 2024, this 10 months is something called as your 10 months salary. And when you do average of these 10 months, you will get average salary. Okay. Now, you would have seen that average salary concept comes in gratuity also if you are not covered by Payment of Gratuity Act. Correct? And average salary comes here also. But is there any difference? The answer is, when it comes to salary definition, if you are not covered by Gratuity Act and receiving gratuity, and you are here receiving leave salary, salary definition is same. Basic pay, DA retirement, commission on turnover. But when it comes to average salary, obviously it is 10 months average salary. But what is the difference? In gratuity, you ignored the month of retirement. In gratuity, what you did? You ignored the month of retirement. Suppose in gratuity also I tell you retired on 17th December, you will calculate November to Feb. Yani 1st Feb to 30th November, you will calculate 10 months average salary in gratuity. But in leave encashment, from 17th December, from the date itself, it will start 18th Feb. So 18th Feb to 17th December. So this difference in computation of average monthly salary is very important, because you may miss out on doing the problems correctly. Okay, that's why I'm giving depth of knowledge. When you go for application, that experience will make things easy for all of you. Okay, right. We understood average monthly salary also. Now only one word left, unearned leave. It is very easy. Whatever leaves given by employer minus leaves taken by employee. Leaves given by employer minus leaves taken by employee. This is unearned leave. But what income tax says, in a year, you cannot give more than 30 leaves. Suppose leaves given by employers are 45 days per month. Per annum. 45 days per annum. Then your leaves will be restricted to 30 days per annum only. So this way you should remember. So leaves per annum given by employer restricted to 30. Right? Either take actual leaves given or 30, whichever is lower. Minus leaves taken. Once you do this, you will get unearned leaves. And now you are not calculating unearned leave for 1 year. You are calculating it for all years together. All years together means for completed years of service. And when we take completed years of service, obviously fraction should be ignored here also. In gratuity also we ignored fraction if you are not covered by Payment of Gratuity Act. Here also you ignore fraction. Only truly completed years only counted. Okay, this way you should understand. Once you do this, you will get unearned leave. Suppose example, every year the employer gives around 30 days as per income tax, 30 days only. Your employer gave 45 days, but we restricted it to 30. You worked for around 30 years, let's say. So 30 into 30, how much? 900 days will come. 30 into 30, 900 days leave is available to you. But you only took, suppose 300 days leave. So 900 days minus 300 days, 600 days is your unearned leave. But salary is given monthly, correct? So that's why you cannot keep that data like 600. So divide that 600 by 30 days so that you will get the data in months. So 600 divided by 30, when you do, you will get 20 months. Correct? Suppose in the question the data is given in months, then no problem, no need to divide by 30. But if it is given in days, then divide it by 30. So that you convert the data into months. That's what important. So this way we understood the entire concept of leave salary. Let us recap for all of us. Okay, chal, I'll ask questions, you try to answer. Chal, let's start. Come on, leave salary. Leave salary when your friends were enjoying holidays, you are toiling hard in the office. So when you work during the leaves, for that if you are paid, that we call it as leave salary. Now leave salary during employment you receive, it is fully taxable irrespective you are government employee, non-government employee, doesn't matter. During employment you received, it is fully taxable. But if you receive it at the time of retirement, for government employees fully exempt. For non-government employees, least of the four is exempt. What are the least of the four? Actual leave encashment received rupees 25 lakhs, right? Actual leave encashment received rupees 25 lakhs. Third one, average monthly salary into 10. Fourth one, unearned leave into average monthly salary. Now, out of these four, first one is actual amount of leave encashment received. Second one is 25 lakhs. If suppose you got some exemption way before also, that exemption will reduce it from 25 lakhs. Okay. Third one is your average monthly salary. Salary, you know, basic salary, DA retirement plus commission on turnover. Right. So DA not forming part of retirement, you cannot take. If DA forming part of retirement, you will take. If they give dearness pay, you can take. DA forming part of service contract is obviously retirement wala part. So you can take. Okay. So basic pay, DA retirement plus commission on turnover. This is how you should understand. Then 10 months salary when we take, you should take from the date of retirement. Right? From the date of retirement, 10 months you do back calculation, write the salary computation, divide by 10, get the average salary. Right? And then unearned leave is leave given by employer into number of years of completed service minus leaves taken. When we take leave given, it cannot be more than 30 days per annum. And when we multiply it with completed years of service, fraction of the year should be ignored. Only completed years should be taken. Minus leaves taken. And if the data is in months, divide by 30 to get it in months. If it is in months, no need to divide by 30. That's it. We completed the entire concept of leave salary in no time. Doing problems on this topic is actually tough, but I will make easy for you. Let us solve some problems, some more concepts, and then we'll solve the problem. Okay. Miscellaneous topics, not so important from exams, but still it's there in the books, so we'll discuss. Retrenchment compensation. Suppose an employee is terminated, retrenched. Employer said, get out. Right? You would be listening to a lot of news that Microsoft has laid off so many employees, Google is laying off so many employees, Amazon is laying off so many employees. And you also hear the news, Tata is hiring so many employees, Wipro is hiring so many employees. So when you listen, you should understand that Indian corporates are slowly growing and Western corporates are actually perishing. That's the true reality which we should understand. Of course, there are layoffs in Indian companies also, but you compare, hiring is more, layoffs are less. Whereas in Google, Microsoft, or in Facebook, that is Meta, layoffs are more, hiring is almost not there. So we should realize the importance that India is growing. So we also should grow in skill so that we can contribute more to the development of the nation. Right? Let's start. Retrenchment compensation. Retrenchment compensation is when an employee is terminated, he gets some compensation from employer. That is retrenchment compensation. Mostly it is lump sum. Okay. So in that case, you will get exemption. Least of the following three is exempt. Very simple. Actual amount received. Very common. 5 lakhs rupees. This is also common. These two are very normal. Right? Actual amount received. Rupees 5 lakhs. These two are common. Average monthly salary into 15 by 26 into completed years of service. Now here when they say salary, there is a difference in meaning. Salary includes all the things, allowances, perquisites, everything should be taken. But bonus should not be taken, and employer's contribution to provident fund should not be taken. What I said, salary includes all, but don't take bonus, don't take employer's contribution to provident fund. Okay, so salary is clear. When we talk about average salary, it should be 3 months average salary, right? When I say salary, average salary, it is not 10 months average. It is 3 months average here. Okay, so 3 months average salary into 15 by 26 into completed years of service. When I say completed years of service, here we will round it off to the nearest. So like I said, 26 years, 3 months, it is 26 years. 26 years, 6 months, it is 26 years. 26 years, 6 months, 1 day, then it goes to 27 years. This rounding off applies here also. Okay. So retrenchment compensation, hope you understood. Let me repeat for all of you. Again, come on, concentrate. Retrenchment compensation. When an employee is terminated, employer will pay some compensation. That is retrenchment compensation. And how much is the exemption? Actual amount received, rupees 5 lakhs rupees. Average monthly salary into 15 by 26 into completed years of service. Now, actual amount received, common. 5 lakhs rupees, very common. Average monthly salary is equal to basic pay plus DA retirement plus commission on turnover. And average is 3 months average here into 15 by 26 into completed years of service. So when I say completed years of service, fraction should be ignored. Okay. Oh, sorry. Rounding off, right? 26 years, 6 months, 1 day is equal to 27 years. 26 years, 6 months is equal to 26 years. So rounding off is required here. With this, we completed retrenchment compensation. Let's come to voluntary compensation. Here, employee is not terminating anybody. Like latest news, you would have heard that PSNL is coming up with a new voluntary retirement scheme. So they are offering to employees ki okay, whoever want to retire, will give you some extra money and you take that money and retire. This is called as voluntary retirement compensation. Okay. So in this list of the following 4 are exempt. Here government gives more exemption actually. Okay. First thing, because employees are doing favor to government, and most of the cases, voluntary retirement compensation is a government employee concept only. Okay. So actual amount of voluntary compensation received 5 lakhs rupees. Actual amount of voluntary compensation received. Second one is 5 lakhs rupees. Third one is salary per month into 3 into completed years of service. What I said, salary per month into 3 months into completed years of service. And fourth one is salary per month into remaining period of service. Suppose example, an employee has to retire at the age of 60. Now because government offered him voluntary retirement, he retired at the age of 58 years. So how many months service was remaining? 59, 60, 2 years. 2 years means 24 months. So the fourth option will be salary per month, that is obviously last month's salary, into 24 months. How many months he could have still served, that you have to multiply. So this is how we will compute voluntary retirement exemption. Let me repeat for all of you. Taxability for retrenchment and voluntary, both are clear. Actual amount received minus this exemption becomes taxable amount. But what is exemption is discussed here. Exemption is actual amount received. Second one is 5 lakhs. Third one is salary per month into 3 into completed years of service, rounded off. And fourth one is, come on, what is fourth one? Salary per month into remaining period of service. Now, you may be interested to know what is salary. And it's quite obvious. Salary is equal to basic pay plus DA retirement plus commission on turnover, which I was discussing just before. Now, hey, basic pay plus DA retirement plus commission on turnover. This definition of salary, in which places it is? What are the areas where this definition applies? The answer is very simple. Come on, tell me. Gratuity if you are not covered by Payment of Gratuity Act. Correct. Leave salary also this definition applies. Voluntary compensation also this definition applies. HRA, which I'll teach later on, for that also this definition applies. Okay. Even provident fund is there. There also this definition applies. So this definition applies many places. Okay. Done. So voluntary compensation we did. Now, if suppose you receive annuity from the employer. Annuity is nothing but yearly amount. Maybe for your retirement benefit, employer is contributing some annual payment. That we call it as annuity. How to treat this? Are very simple. If your current employer is giving you that annuity, yearly payment, or is your current employer, present employer giving it? Yes, then tax it under salary. Okay, fully taxable. Okay. If suppose former employer is giving and a past employer, then tax it as profits in lieu of salary. If your former employer is giving, tax it as profits in lieu of salary. In that case also it is fully taxable. Okay. And suppose you purchased an annuity plan with some insurance company and insurance company is paying you money. Then it is taxable under section 56, income from other sources. Actually, everybody should do. Right? Such annuity plans or some plans for your retirement definitely are useful. Because suppose I need monthly 1 lakh rupees for my survival. So, can I plan that at the age of 45 years or 50 years, I should earn so much money that I deposit one place, entire amount. I should get monthly 1 lakh and I can live a peaceful life without worrying about my monthly needs. And that's what can be achieved through annuity. And if insurance company pays you the annuity amount because you purchased a plan, that is taxable under income from other sources. So annuity revision done. Simple. Annuity is a yearly payment. If employer pays you, current employer taxed under salary. Past employer taxed under salary only, but as profits in lieu of salary. But fully taxable. Don't worry. And third one, if your insurance company pays because you took some annuity plan, then not taxed under salary because insurance company is not your employer, correct? Insurance company is not your employer. So that's why taxed under income from other source. Suppose an company has 2 months notice period. So if they want to remove you, they should give at least 2 months notice. And then after 2 months, you have to leave the job. But the company said, no, we don't want to give any notice to you. We want you to get out today. Abhi, get out from here. Then you will say, sir, no problem, but abhi 2 months notice period salary. Can you pay so that I would be very happy to get out? If such salary is paid, that 2 months salary is paid for the notice period, that is also taxable under salary chapter. Okay. So salary in lieu of notice period. Salary in lieu of notice period taxed under salary. And last concept of today, that is profits in lieu of salary. What is the last topic? Come on, repeat with me. Profits in lieu of salary. So when we talk about profits in lieu of salary, I'll tell you very simple thing. You could have continued working in the office, you could have got salary. Now, because you are terminated, you are getting profits in lieu of salary. Maybe your terms of employment are changed, modification in terms of employment, then you get something that is profits in lieu of salary. So first point is clear, right? Either because of termination of your employment or because of change in terms of employment, if you get some lump sum payment from the employer, who gets? Assessee gets. Who is assessee? Employee. That's what you should understand. Okay. In the notes, you will see assessee. Don't get confused. Assessee is nothing but employee. So employee gets any lump sum payment from employer because of termination of employment, because of change in the terms, yani modification of terms of employment, then it is taxable as profits in lieu of salary. Any amount received by employee on termination is obviously profit in lieu of salary. But when employee is terminated, he may get gratuity, he may get commuted pension, he may get superannuation, he may get provident fund, he may get recognized provident fund, public provident fund, or he may get something called a statutory provident fund, he may get some HRA amount. These are not your profit in lieu of salary. What I said, your gratuity, your commuted pension, your HRA, your leave salary, your superannuation fund payment, your provident fund, recognized provident fund payment, your statutory provident fund payment, your public provident fund payments, these are not considered as profit in lieu of salary. Okay, very good. But suppose the provident fund is unrecognized, not recognized, and you retired. Now, from the unrecognized provident fund, you are getting the payment. Now, here, employer's contribution and interest on employer's contribution. Come on, remember, employer's contribution to that unrecognized provident fund and interest on that. These two will be taxed under salary. Unrecognized provident fund, employer's contribution and interest on employer contribution, which you will get at the time of retirement. Right? It is fully taxable under head salary. Obviously, if employee's contribution is paid back, your money paid to you, employee's contribution, correct? Your money, employee's contribution, your money, not taxable, right? And if interest on employee's contribution is there, we will tax it under other sources. So simply remember, when I talk about unrecognized provident fund, employer's contribution, interest on employer's contribution, taxed under salary. Employee's contribution not taxed because salary was always taxable, and interest on employee's contribution taxed under other sources. Right? Sure. Very good. Now I want to discuss with you that what to do if you get some money from employer before you join the employment and after you retire from the employment. Right? Before you join, after you retire. And you may receive it in lump sum or you may receive it in installments. All that will be treated as profits in lieu of salary. But please remember, it cannot be gratuity, it cannot be PF, it cannot be superannuation, it cannot be commuted pension, it cannot be normal pension also, right? This list is always there to remember. So this is a theoretical concept, profit in lieu of salary. I hope you understood the entire concept, and we'll meet in the next video solving some lot of problems on these topics. Okay, bye bye in this video.